This conference will
Okay.
now be recorded.
Sorry, I forgot to do that.
No worries.
So Breaking Bad would be, so we just went over a failed balance break, in this case, a failed balance breakdown. Tried to break down out of the balance. What should happen is this market should get killed
Should
because the
be
long should be panicking. Instead, it recovers the high volume node, one of the best trades in trading, and this did react.
okay.
That's
All
what
right.
should happen, right?
Uh,
So, and then today we had the opposite, where it tried to break out this way. Um, Opposite meaning this was a short. This first one was a long type
huh.
FB. So this one tried and failed, and then once I got to this high volume node, I took this short. I'm still in this short. I'm about to get out of it because it's at the low level. So what I was explaining next was then you get these. So I just wanted to draw this balance area, balance area. So you're watching for different trades here. So you can watch that original balance area for a failed balance breakout. Once it gets to the high volume node, that's a trade there. And then Breaking Bad is when you have balance and balance, and the newest balance, the most recent balance, is breaking down. This could also be a breaking away, depending on the if there's having enough relative volume out of that. We'll go over that trade, but just say this breaks down out of this balance and it breaks through the prior high volume node of that prior balance. Now you have a Breaking Bad trade too. That's the Breaking Bad. That's the BB. So Breaking
Okay.
Bad is current balance breakdown through the high volume node of prior balance, and then you
The,
also have that failed balance breakout as well.
is that the most immediate balance that it's breaking out of?
Correct. For the Breaking Bad. Yeah.
Yes.
So
Okay.
you're looking at current balance break. I mean, technically you could have taken it here, right? So this is just a smaller balance area. I mean, you can make this one balance. So this I could have taken this trade too, right? I could have taken the Breaking Bad, and but
Hmm.
I did take at least I did take the failed balance break out of that structure, right? So I could show you them all. They're all over the place, right? But it's up to your interpretation of actually the Breaking Bad here was in crude or breaking away. I'm sorry, but so this is balance. This is very clear cut, right? Like there's no discrepancies if this is a balance area, right? You can see
Right. Right. Yeah, I can see that. Yeah.
the back and forth are just traders placing bet. When it moves out of here, someone's going to be right, someone's going to be wrong. That's what we're trying to take advantage of. So this is doing what it should have done, right? So this
Yeah.
should have broken down as long as they're in trouble. Then it tried to hold, built another balance, and then this is the kind of move you get when you get a bunch of traders that are caught, longer term traders. They're all puking out these positions now, right?
Hmm.
And this is also for good thesis. So when you break this whole thing down, it went right through, melted right through that. So this market is looking very bearish.
Hmm.
I don't like taking like double sized shorts when it moves this far away, but it's telling you something here that it broke down through there. So if you're talking about options, say you're looking at maybe a week from now or a couple of days, say I'm going to buy some puts or I'm going to do a put spread based on the structure stuff. I don't really do that as much because I'm a futures trader and I've got enough going on. I can't be monitoring options positions, but bigger picture stuff. But the way I use this stuff again is if I get these kind of looks and then all of a sudden you start seeing bearish events, you can trade bigger size in that direction because that's an A plus setup, right? I'll trade any event, if it's in an area, those right position tradings, long or short, depending on if the volume event confirms in that direction. But at like this event right here, I could have, I wasn't watching this, I was doing something else, but I could have definitely, this fired off. That was that breaking out of that balance. I could have taken this trade right away and I could have taken it 2 times size based on that balance information that we just talked about, right? So that's the idea with the structure stuff. One, you want to have an idea so you can trade bigger. That's what I do. And then there's also trades connected with the breakouts of these balance areas, right? And you can even see here, the more you watch these, you'll start to pick them up, right? So this was a balance. This was a few hours balance. Tried to break down, gave back, held the high. This is what should happen. Sometimes you'll get these juke moves. As long as it doesn't get back to that high volume node, then it's still in a bearish state, and then you get that next wave down. If it would have done, you got CL right now too. Um, but if it would have done something like that and gotten through there, then I would have taken what trade did I take there?
The failed balance breakdown. Right.
Exactly. And that's literally the best trade in trading as far as position trading structure stuff are concerned. So then, again, it's all fractals. And then when you look at something like, and I went over this on the AM webinar too. So So when you look at NASDAQ here, so what do you see here?
A very busy screen.
Right. Well, right. But when you're looking at the bars, like you can see the two-sided trade here, right? It's not perfect, but it's two-sided trade.
Okay.
And
All
then
right.
what did it try to do here?
Tried to break out.
And it didn't. And then it built more balance. So this is already a signal like, okay, something's up. It's not dying, and now they're built. And then you started getting breakouts of these balance, breakout of that balance, and now you get through that balance. So this market should have been off the page, right? Because it should have done something, didn't,
Mm-hmm.
and it should have done that. And then because of what the news and things change, obviously, and then today it broke down through that guy, and you can see it like came back and held there. But
Mm-hmm.
the bigger picture stuff right now to me is this is through all this and then broke down out of that one, through that one, through that one. This is looking like this in the next few days. This is going to get absolutely destroyed, right? So that's how, and you're pivoting here too, right? You originally say, okay, that's a failed balance breakdown. This thing, I'm long, and you still would have caught a nice long if you waited for it to break this high volume node. You catch this is a good, this is a good 800, 700, 800 point move over the
Mm-hmm.
longer term. But then, things change. It's if then scenarios. So then today we gap down through all this stuff. So I was telling the trading room, these zones coming back based on the structure stuff and what it's done are going to be very good shorting opportunities. You can see, like I took this Izzy on the webinar, pop back up into this guy right at the top. There was a stop run. There was actually a double whammy. That was this stuff. So you can see like putting these areas in context with, and I traded this double size because I have the short bias. You add these stop runs right into that Izzy zone, jump in the trade, you catch this. It's been a very nice trade, right? And this is a over 100 point trade, 200 point trade there. So the point is you got to know your areas, you know how to trade the volume events. Do you have the SI course? Do you ever get
Yes.
that?
Yes.
Yeah.
Yes.
So that describes how to identify the 6 distinct setups, how to trade them with the ATR retest, and how to draw them and everything else. So once you have that all down, now you're just looking, the principles of the volume events and how to trade them. Now you're just looking for your any of these position strategies, the reversion strategies. I don't know if you take those. Those have been incredible. Where you're trading the trade back to the volume event.
Yeah, I'm starting to see those, and I've taken a couple of those, and
Right.
starting to take more of them, and looking out for the A+ ones as well.
Right. Yeah, the A plus. That's why it's called A plus. It's the best one out there. And there was one actually today we caught on the webinar. You watch it. It happened in 5 seconds. It was actually awesome. Doesn't it usually? It's not usually that easy of a trade for me anyway. Feels like every trade I put on, I get tortured. But it was this here, right? So we took this on the webinar. It was literally in 3 seconds. I had here's your entry. So you had event, entry was in the event. It doesn't have to be in the event, but as long as the stop is
Stop is
outside.
outside.
I got filled to the tick. I'm not kidding you. This was 5 seconds, right back to the zone I was out. So that's the A plus reversion. Yeah, I mean we're going back and forth here, but that's the whole point of this. Right? I keep telling the trade room, it's like you pick what you want to do, and it's not to take every one of these. As you get better and you're more proficient at like the slug or the bark, then you can add an Izzy or you can add one of these, or if you get once you get more advanced, you start to identify the FBPs. But it's not to get in here and try to take every one of these. I mean, this is all my stuff over 25 years of trading, right? So
Sure.
you're not gonna get in here and trade all these right away. But pick 2 position trades. Pick one of the auto fades where you're jumping in right in the middle of the zone, the sexy Gexy or the TikTok, and then pick a reversion trade, right? And then just focus on getting really good at those, and then things will start to click, and things will slow down, and you'll start to be able to identify all this stuff, and it won't seem like you're looking at a very busy chart, so on and so forth.
Yeah. I did have a question on the Gexy and the concept of relative volume. I'm not sure I understand what that concept is, to be honest with you.
Let's look at here. I gotta get out of this. So this was the FBB that I told you I took in gold, right? So I was off of this event here. So that was this. So it's the first volume event you get that turns bearish. So I actually got long in Izzy here, took a loss on that one off of this double whammy. Then it came a little lower, and this was on the webinar. You'll be able to watch it. Where's the chart? Show you again. I have my life looking for my charts. Here we go. So this zone was around, what was this? 2747.3 ish. So that was 747. Right. So it was below. And I told my room, I said, as soon as it breaks this high volume node, if I get an event, I'm taking that FBB. And it was right there, that sell ice. So I just wrote it down, and now we have confluence. It's in an Izzy zone, so that's one reason to be looking to get out of some of them. But I just got out of all of them. And then this is the great thing too. This came down. You got a stop run. You could have trailed your stop. It never got stopped out, and now we're at the blue lug. We're in the middle of the day. I have no problem covering this trade, right? So you see, bouncing right off this blue lug. So these are the areas when I get in these trades. So you had market profile composite high of this guy, low of this guy, confluent with that Izzy zone and blue lug. I'm fine with that trade. I'm out of that trade, right? So these are the areas I will piece out at my important areas, but usually the lugs, the major lugs, are my main target to get out of the whole trade and or an opposing volume event. So if this volume event would have turned bullish, I would have been out of it. And that's how you should be trading all your position trades, as far as like your final exit type of thing, right? And in the meantime, I'll piece out as it hits important areas on the way down.
Right.
And those are those important areas in the trading in the zone document that you should have.
Which I do.
So anyway, what was I showing you here?
Relative volume, I think that's what I asked
Relative
about.
volume. Yeah. So what don't you understand about it, or what's not clear?
So, I mean, you get it from the Sierra chart, is that correct?
Yeah, that I would not. I don't know if you have. Which one are you using?
I don't have, I'm trying to set up Sierra chart, get that ready. I don't have it ready yet. I have Thinkorswim or Trading View or the other
Yeah,
two.
Thinkorswim is useless in my opinion because it's going off the relative volume. So this relative volume is based off the last 60 bars. Of course. So I mean, so of course the opening is always going to be. So if you're sitting here looking at a relative volume chart and you're thinking this is significant, you're like, wow, look at that spike, man. It's 7 times normal, right? No, it's 7 times normal because it's counting the last 60 bars overnight. So this is actually 7 times normal on this type of chart is normal, right? Every opening you'll see 7, 8 times normal because it's counting overnight trade. I don't care about that. I want to know what gives me a better gauge of what's going on. This is telling me that this exact time period for the last 30 days, this is over 200%. Like if it lights up yellow, that's telling me, and then you can see, then it launched right from there, right? So that's telling me something bigger is going on here because I'm basing it off the last 30 days. You don't have to use 30 days. You can use 15 days. You can use a week. That is significant to me to know, okay, this is taking all the volume for this exact time period, whatever this was, 7:40, 7:35 my time. Something bigger is going on here. I'm going to be aware. Like for instance, you don't want to be taking reversion trades when you see heavy relative volume. You don't want to be taking sexy geckies when you see heavy relative volume because 85% of the trading here is algo. It's algo and dealers hedging. But the other 20% of the time, the big money's coming in here and they got to get their business done. It will blow right through these GEX levels. That will blow right through the ATR levels. So you don't want to be taking those trades if you're seeing heavy relative volume, right? So you can see overnight, there was some major trade going on here. I've never seen this much relative volume, like just consistent over the entire evening. Like we're talking from that Globex open, you can see this thing was just huge relative volume, peaking right at the bottom here, by the way, like 16 times normal volume for that time period, right? So it's important to know.
Was overnight, right? Is that what you're saying for that?
Pardon me?
And that time period was overnight? Is that what you're saying on this one?
Yeah, but the point is, I don't care when it is, if you're sitting here, you're like, oh my gosh, this is, even though it's overnight. So if you're just looking at volume in a relative sense, this can only been, I don't know, like 2,000 contracts. Like during the day, that's nothing, right? Overnight, it's a lot. Well, this is not only telling you, like if you're saying, oh, it's only 2,000 contracts, yeah, but you got to know, for this time of night, 2,000 contracts is 16 times normal volume, right? So that's how I gauge it, and that's the best way to gauge it, in my opinion, is looking at this exact time period, and for both ways, right? So if you see this thing start to dip below 100%, and then you really know there's no big money in here, and then that's when you get the type of range bound whipsaw whipsaw you to death trade. So this isn't terrible, but it's definitely not hitting 200%. And you're getting more of a range type trade, right? So those, when you get really bad relative volume, that's when you can expect like the reversion trades to work better, the back and blacks to work better, just because there's no one in here besides the algos and the dealers, options dealers, right?
How far back do you go on that? I mean, if you know, I've seen a couple of setups already that would have been Gexies. I thought, how far back do you go when you know, like at 10 o'clock, you see one of those?
Well, when I'm doing the sexy Gexies, I mean, I'm trying to use the most recent bar, but yeah, I mean, if you see,
Okay,
you know,
all right,
if you see huge relative volume, and then it's moving into a Gex level when you see normal, you can take it. It's not as scary, but you still
okay,
got to remember there's huge relative volume behind there, and there's a lot of trade that you may get run over on that trade, right? The best ones are just when you don't see any relative volume at all. But yeah, that's more of a, I don't want to say guess, but that's more subjective on how far back will I look. Like, say it came down to a guess level right now. Well, I'm not going to pay attention. I don't care about the overnight stuff per se, right? But if it was like the bar before this bar and it was heavy relative volume, I probably wouldn't take it. If it was obviously the bar that we're in, I wouldn't take it. So that's more of a judgment call.
okay.
And the thing is, there's enough sexy Gexies and back and blacks to take
And they're
when the
all over the
relative
place.
volume, when the normal volume is normal, which is 85% of the time. So if you're questioning it, you probably shouldn't be trading it anyway. In my
Okay.
opinion, that's how what I go by. Is that clear on the relative volume?
I believe so. It's just a matter of getting it so I can recognize it correctly.
Right.
That's going to be on me to get that set up. Is
Yes.
the Sierra chart, you're pretty much your opinion about the only one that is useful for it?
You put that in the trade room and the Discord
Okay.
channel. Just ask what other ones or platforms are you guys using for relative volume versus, and some of them have the actual settings and stuff. All you got to do is import their settings. So some people have it on Ninja, some people have it on whatever their trading view. So just ask in the room and somebody will help you. But on this
Okay.
one, you just you go to studies, and it's this relative volume here.
Okay.
Right? You double click it.
Yeah. Like I said, I'm still in the process of getting that set up. It's on me.
Right. Well,
And
when you get it, I mean, you'll have this
yeah.
recording.
Okay.
So you just go in
All right.
here. So I have my period set to 30 days. And then I have my high percent threshold at 200%, where it'll turn yellow. And the low
Okay.
percent threshold is at 50%. So it just color codes it so I can see, okay, I can just glance at it and see, all right, this was under 50% or this was over 200%. You can set these for whatever you want, right? That's what I have
Mm-hmm.
them set for.
Okay. All right. Yeah, that's so I'm working on that. The next thing I need to get are going to be the lugs. I haven't gotten those yet, but I'm focusing on right now. I'm just like I said, I'm focusing on the trades that are the ATR test and confirm base kind of trades, and I'm starting to see the reversions, the A plus reversions,
Right.
and I want to study more and um, and study more and learn more about the other the balance based trades, failed balance and breakouts and things like that.
Right. I mean, that stuff's a little more advanced, right? Meaning
Right.
advanced where you need to see enough of them to kind of to recognize them easier.
Yeah.
So if you're not that you can't take them, the failance balance breakout, and I point them out all the time as well, but you know, the simpler trading strategies are the slugs and the barks, ATR retest confirm, barks
Hmm.
and are the same thing, the Izzies, right? So as you get down the sheet, they get a little more complicated as far as you got to be able to recognize things, but I would get the lugs because like you've heard me say 100 times, the lugs are the second most powerful thing I've ever seen next to the SI events.
Okay.
So, and they're very straight. Like for instance, we took a slug on the. I'm still short some of this, but this was a slug in ES, right? So you had. I put this in the room a little bit ago. We talked about it on the AM webinar. You had. I mean, this doesn't get any better than this, right? So look at that red lug. You have double whammy up here. You had buy stops, so it was a slug and an I lug U. You had buy stops
Mm,
and sell ice at the red lug, and you see the reaction, right?
yeah.
They dropped 30 points. So this is why I use them, because they're ridiculous. They're ridiculous for initiate trades, and they're awesome for targets too, where you can sit here, okay, I'm holding to the lug, or I'm holding to the yellow lug or the blue lug. So they're the yellow lug is not as strong. It's more of a median point of control type of thing, but
Hmm.
it's still something to pay attention to. But the red and blue lugs are ridiculously powerful. Like even overnight, they'll form them, especially with heavy relative volume. You want to be careful. You can see they form new lugs, and look, this thing bounced right off the lug. So it's like you want to be careful of like just fate. This is why I would still take a slug here, but if you do get these, just be mindful that the time where they do break is when you're getting that kind of relative volume, right? So that's the time. Other than that, when the relative volume is low, then you get whatever she's using as her inputs for those things. These algos are trading the same areas. It's pretty incredible. So I would definitely get those before you got anything
Okay.
else.
Okay. All right.
Do you have the zone drawing tool?
Yes.
Okay. Did I give you a discount to that?
Yes.
Okay. I didn't remember that.
Can we talk about this chart for a second, real quick? Because this is a Thinkorswim chart.
Yeah.
The lines that you draw, I'm trying to, again, I think I mentioned this before. So, silly question, difference between white and red, is there?
No, it's just to separate them. If I have the zones drawn, they're important. So I just do them because when you look at them, they can all blend in together. You don't know where one starts and one ends, right?
Oh, I was hoping to see if I can, get the information that I could set up my own chart and Thinkorswim for this, and not have to, rely on the one you post, I guess.
Yeah, well, this is another thing that's gonna take you some time to draw these accurately. So I would definitely, yeah, you can get your own and start drawing them, but I would cross-reference with mine to make sure, right? And these aren't perfect. These are areas that I see that things have happened. So the zones are drawn on the four important areas of trading, right? Bottoms of balance areas, like we've been talking about, right?
Okay. Yeah.
High volume nodes of balance areas, like we've been talking about. I don't usually draw the zone for a high volume node just by itself, but the high volume nodes are usually confluent with something else that we're talking about. So, but it's just an area you want to pay attention to, right? So this was on Friday. If you were watching this balance area, you'd say, hey, look at that. There's a volume right there. Like, that's right at the high volume node. I'm going to take it along there, right? So I don't draw the zones there by themselves, but you can just eyeball a high volume node. So you can see even like right now where this market stopped today. It was right at the high volume node of this bigger balance, right?
Mm-hmm.
Is right. Like, so if I were to draw high volume, again, these are just areas. So I would draw that like that. And that's basically right there. And right in that Izzy, I missed this trade on the webinar. I was on NASDAQ and I missed this Izzy long. But the point is pay attention to these and you can use those as areas to trade. So that's where I'm drawing these Izzy zones. So again, I'm drawing tops and bottoms of balance areas. Let's use this guy, right? Tops and bottoms balance areas, high volume nodes of balance areas. And then the other two areas are directional conviction. So you don't get much bigger directional conviction to something like this, right?
Yes. Yeah.
Straight move bars, huge bars. That's what that zone is. And then buying and selling tails. So buying and selling tails are very, very important too. They give you a lot of information about the market. And buying and selling tail is just instant rejection. So you can see like the one down here. And of course, it's all relative to the time value, time period of chart that I'm using. It's going to take a while to reject on an hourly chart type of thing, but it's still something to know. Like if a market gets up into an area and you see this tail, there's something up, and you can see the market did react here. It put a little one, and then it put a bigger one, and then it reacted. Right, came back,
Mm-hmm.
same thing, reacted. So that's exactly why these zones, for instance, are drawn here. You had little tail here, little directional conviction, buying tail, came back. That's directional conviction too. So you'll start to see the stuff line up together too.
Oh, okay. All right.
Right. So that's exactly why this zone is drawn. And then you had this remain an important area. Then it closed here this day and gapped up to there. So gaps are directional conviction as well. So this zone was a very important zone, still is. Even if it comes back down here, I will promise you'll get a bounce in that zone. And they're even better, obviously, when you get the volume of it in those zones. So again, tops and bottoms of balance areas, high volume nodes of balance areas, buying and selling tails, and directional conviction. That's how I draw the zones. So it's going to take you a while to get proficient at it. So I would draw them and compare them to mine every day.
And yeah, that's exactly what I was thinking of doing. Yeah.
And then you'll get better at drawing those as well.
then put those into like a cloud notes thing to kind of help me on Bookmap. But
Yeah, absolutely. I'm trying to figure out. I mean, I gotta look into it, or I want to get them for the room where you can just download them and
yeah,
instead of have to come in here and copy them all. Um, but like for instance, I don't want them on my Bookmap chart. I got enough stuff on this Bookmap chart. That's why I
yeah.
use there's already too much stuff on this as it is.
Well, yeah, I'm doing it sort of be like the cloud notes over on the right hand side, like you got right there. There are a couple of them right there.
Yeah, you could do that, and then you can. I think they have the thing now where you can carry the cloud notes over onto the chart too.
Mm-hmm. I don't know about that one, but okay. Um, Dang it, I had a question. I was going. Oh, I'm back on that chart, the Thinkorswim chart. Do you, do you have any kind of a limit as far as how back you'll pay attention to a zone? How old?
I'll go back as far as as long as it hasn't violated that area, right? So it's like if it's a zone, then I see the market like here's one here. I think there's one today. Let's see. Like this one, I could have probably let's see, why did I keep this up here? Right. So this stuff was from back here. This zone started back, and you can always go back to see where it started. That's the whole idea, right? So like this was this gap down this day, right? So that's why I have a regular trading hour starting. You see right there, closed, gap down, came back, little tail, top of a balance area as well. Again, you're going to start to see a lot of things line up in these areas. Came back, selling tail, right? So this one did trade kind of up and through it, but then again, it gapped down again. That's why I kept it, right? But if you get a zone where it's kind of like this zone right now, I mean, I kept it
Well,
here because there were some selling tails. But if it starts to do one of these, well, then yeah, it's not the market's not reacting to that area anymore. Then you delete it. Same with market
okay,
profile and stuff. So that again, that's from experience of watching them to know, okay, this has violated that area. Nothing else has happened here. I can delete this zone, right? So that goes for anything in trading. It goes for market profile composite. It goes for our volume events. If the market trades back and through them, right? That's the whole reason. Like this one in gold. Like I don't trade once the market pushes an ATR above and below. Then my exact words on the webinar today is this event is dead to me. Like this one right here. I'm not tag the ATR above, tag the ATR. I'm sorry, tag the ATR above, tag the ATR below.
yeah.
That's showing me that type of action. That's not important to me anymore. I'm not trading it. Same with the Izzy zones. It's the same with market profile.
That was actually going to be another question I had for you that I'd forgotten to ask you already. But yeah,
Sure. Yeah.
um,
So that's very important. I mean, you got to recognize that too, and that comes from experience. But I mean, it's not hard to
sure.
see if a market keeps trading up and through an area. It's like, okay, it's just not market's not reacting to it.
Okay, so on this chart again, and and I don't have the ability to annotate, I guess. I don't know, so it's hard for me to point this out. But at the very top, up at the 6154.81 level, at the on the far left, you got the zones marked from there, and then on the far right, you've got going up and down, and it's because are you saying it's still there because you haven't really effectively traded that zone? You've gone up into it and then out of it. Is that correct?
What do you mean? Like
Right
right
where
here?
right where you're at right there. And
Right. Well, I
is
could have adjusted this a little bit, but say this stuff didn't happen. Say that didn't happen. So if I'm staring at
uh
this like going into today, and I would have deleted the zone very likely. But
okay, that was my question.
what I should have done today. So again, I wasn't even. And also, I don't adjust them like right away because I'm trying to get all this done in the morning. Like if the market's way down here, I'm not worried about it adjusting a zone up here right now. You know what I mean? So I would have adjusted this. So what I would have done is deleted this zone like this,
Yeah.
right? But I would have put a new zone here because then you see some new stuff did. It wasn't that exact zone, but some new stuff happened. You had selling tail, directional
Uh-huh.
conviction,
Uh-huh.
selling tail.
And a big directional conviction right there.
Right.
Right.
So
Yeah.
this is exactly how I'll draw. I would have drawn and when it came back up here. I just again wasn't concerned with that. I knew we weren't getting up here today, very unlikely. So I didn't even look up here. And then that's
Yeah.
how I like this. Right. Take that and I'd probably bring it down to right about there. And you can see where the bottom of that zone lines up with the high volume node of this little balance area. So it's like you'll start to see as you understand how to draw these. So you can see that's that middle of that balance area. So this whole area is important, but you got the bottom, that's the middle, that's the high volume node. Then you also incorporated again directional conviction, selling tail, right? And this directional conviction too. So that's also a judgment call. Like, what's directional conviction? Is it 10 points? Is it 20 points? In the ES, usually if it's 20 points or more, 15, 20 points or more, I consider it directional conviction. NASDAQ, 100 points or more, I consider it directional conviction. Gold, crude, 100 ticks or more is usually a good judge of directional conviction, right? And you can see, like, when you get ridiculousness like that, and you see what did the market do first? Test up here.
That was on that whatever announcement, whatever it was.
Yeah, but it failed multiple times. It failed, tried again, failed, tried again, failed, and then it finally got through it. And you can see it needed that to get through that area, right? But then it was still a zone. That's why it's still there. I kept it because then you had directional conviction going up this way, and then you could see then it held, then it held, then it held, and then it gapped down. So this needs to be adjusted a little bit for this gap today, right? So this is the bottom of that bar. So I'm going to draw a new zone for that. Very important when this market comes back there, which will probably be tomorrow. The way these markets trade, they just bungee jump every single time.
Do you put any weight to overnight action at all?
Pardon me?
Do you put any weight to overnight?
Not really. Only when I see heavy relative volume. You could have a chart that shows overnight. It's just too busy for me, and I think a lot of it is just nonsense. Again, but if you see a night overnight like last night, yeah, you should put some weight into it, right? And you can see what happened with the overnight trade, right? Usually it's gonna show its hand with the relative volume, right? You're never gonna get moves like this without heavy relative volume. It's just not gonna happen, right?
Okay.
So, but yeah, I don't really. Some people do. I don't find it that crucial to my trading. But yeah, you can have balance there. You can use the overnight chart. You can use the all of them combined and draw your balance areas. I just think it's much easier to draw the balance areas. I think it's easier to see these. I want to see these gaps, which are directional conviction. It's just I like seeing the regular trading hours chart in this format.
I understand. Okay.
So you can see right here, like, we're forming balance right now. This is, again, it's all fractal. It's not a powerful weekly balance, but this is what is called balance. It's back and forth. There are traders placing bets here. Whatever way this breaks out of here today is probably going to give you a bigger move, right? It's just common sense. It's time and volume. Time meaning the longer it sits in here, the more traders trade here. When it moves up here, someone's going to be right, someone's going to be wrong.
So to ask a question, if we have that balance area right there, now if we get a bearish event that starts to send it down, that's when you're talking about doing the like the double side shorts kind of a thing. Is that what you're talking about?
Correct. So if this were to break out, well, I already know this is a bearish view, right? Mm-hmm. If it breaks out of here, that's one, you're very likely. It doesn't mean you can't have a failed balance breakdown. We've been talking about those too. But what's going on today, as far as this big gap down, then you build balance. If it starts to break out of here, and especially if it gets through this, where this directional conviction started today, you are very likely going to see a big move because now you got the fuel. So this is the other thing I talk about too. So say you're looking at this Izzy zone. See how it's a different story now. This morning, it was a great Izzy zone because it gapped right down into this zone. And there was a volume event down here. Again, I told you I missed it. This is on the webinar. Someone pointed it out because this did not draw in the zone drawing tool because it was like 800, but it was combined. It was like 600, 200. But I didn't see it. And it hit that Izzy zone and just ripped. But now this is a different story type of Izzy. Why? So if this market moved back down into this Izzy zone right now, why is it a different story? I just gave you the answer right there. Why would you not want to just immediately jump into a short in this Izzy zone this time around? In this white Izzy zone right now? What would give you pause and just jumping it along like you would have on this first one?
Oh, I'm struggling here on this one, Scott. Sorry.
What are we just talking? What's this here?
The balanced area you're talking
about? Right. What's a balanced area?
Up and down, back and forth.
Or what is it though? What's happening in this area?
Buying and selling, trading. Yeah.
Right. There's guys getting short. There's guys getting long. Right?
Yeah.
So when this breaks down out of here, who's feeling?
Because the first time through is because there was nothing up above it. It was just straight down.
These are the best.
You had people up there that were stuck up there.
Right, but you get the big move is all the way down to there's nothing You're not, in front of anything. This thing is a huge move down. All the selling came in here. These are the best Izzy's. They're like, it's kind of exhaustion. And then you get your volume event and you get this huge bounce.
Yeah.
What's happening now is a different story. Now you're getting, so if it breaks down here, who's in trouble?
If it breaks down there now, it's just like the
If,
group right there,
if it breaks out of this balance area, who's in trouble? Longs or shorts?
longs.
Exactly. Right. So do you really want to just jump in an Izzy trade when you
And bring
know
it right
the
back up
last
to them.
5
No, you
hours
don't
of
want to do
trade?
them. You don't
Right.
want to do that. You want to
Right.
keep it going
You,
down.
you
Yeah.
can get run over. It
Yeah.
doesn't mean it can't, because again, we just talked about fail balance breakdowns. So my
Mm-hmm.
point is, now if I got an Izzy, so this is Izzy variation number 1 in here, right? Right. Where's that? Right here. Inflection zone trade. That's usually an aggressive entry, meaning the first volume event. And that, again, this is the one I missed. I should have taken this Izzy first move out. And this is why you take them aggressively, because it may not retest. And this thing was gone, right? 40, 50 points gone. That is the normal Izzy, where you just take it aggressively. There is variation number 1. In the case of a zone that is directly above or below, that's right now, that zone we were just talking about, below multi-day balance, doesn't have to be multi-day, it could be daily. It's not as strong, but it's still a daily balance. Trade can still be taken, but needs an ATR retest confirmed by the volume event. So that's why I demand that, because I don't want to just jump into Izzy zones first move out of balance areas, because I'm risking getting just crushed. If it's able to hold ATR retest confirm, then I'm willing to take that Izzy. It's still not a great percentage play, but like I said, you get failed balance breakdowns all the time. So you may be participating in what is becoming a failed balance breakdown. You don't know, obviously. So what I demand is, if we are breaking right below balance or right above balance, and that's the Izzy zone, ATR retest confirmed, then I'll take it, right?
Mm-hmm.
So that's the way to avoid getting run over. But when you get these Izzy trades with these huge moves right into them, they're the best trades. They're the best trades in trading. The Izzy trades or the market profile trades, where you have these huge moves where all the sellers are basically exhausted at that point, and you already know people are going to be participating in these areas, right? And then you take the trade, and then again, I missed this one. This one hurt. This was a 40-point winner, and then it failed right in this Izzy zone, right? So I did take this Izzy though, so that's good.
Okay.
Any other
And
questions on that?
those zones, do you consider like consider from a top and the bottom of the zone, or is it just between, or is it just within?
It's within, and again, it's not an exact. These are zones; they're not
Mm-hmm.
exact prices. So, for instance, I even talked about this. See how this didn't quite? It was out of that zone. It wasn't quite to this white zone. I got that double whammy in there. I took it. So it's again, it's a little more subjective, where you say, okay, that's close enough. If it was something like this and it came right here and I got a volume event right there, I wouldn't take this Izzy short. That's not close enough. This is a couple points away with the volume event. I'm willing to take it. Right. Same with the slug. I took the slug
Because
here too.
because it was a big jump up to that point anyways, right?
Right. Yeah. Yeah. It moved and came down and came back again. But I wasn't worried about fate. Like, it wasn't balanced right there yet.
Okay.
So I was okay taking that one aggressively, and I took that, and I took the slug, and I took the I lug you, all off of this stuff, right? So there's Izzy, and all this stuff is even better. The more stuff you can overlay in an area, the better the trade has, the better percentage the trade, right? You had a Ludwig level, you had the market profile composite.
Mm-hmm.
What was that? Nothing here. There was the middle of this guy, but you had the Izzy zone, right? So this was a great trade, and it worked, right? So I'm still in it, but I'm looking for very, very likely. So this is the other. So this is where people always get confused. Like, okay, they can see where to get in. We're like, well, where do I get out? That's up to you. You can use my important levels. Those are the ones in the trading in the zone document. So, for instance, I have this very, 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 very likely is going to head down. If it got down here, now you got yellow lug, you got daily value area low. So daily value area is just one standard deviation of VWAP. A lot of algos like to bounce it off there. So you got confluence of daily value area low, yellow lug, and you have one of the most important things, the prior event from the day, all at the same area. So when this makes it down here, and I'd be willing, if I were a betting man, which I am, that it's going to, it's amazing how these markets just gravitate towards these other events. So I am watching this very closely. That's all in that same area as the yellow lugs. You see what I'm saying? So this is where I will get out of most of my trade. I'll hold a little bit of it because I always try to hold for the bigger move into the major lug, right? So you saw me get out of the gold one into the lug. So say I got out, I've got 6 micros on right now. I was risking $500 on the trades. I got slug, I lug you, Izzy, right? It gets down here and it starts to struggle. I'll get out of half. Then I'll hold half to try to make it to there, or an opposing volume event. So that's always my default exit. If it's moving and I get an event that turns bullish, I'm out. I don't just ignore new events because I want the market to go down. If it's telling me it's a bullish event, then I'm out.
Yeah, I got that part.
Yeah.
Okay, so need to get the lugs. That would be what your suggestion is before others. So
Yeah. So if you go to her website, there's what'd you say?
I've been there and I've looked at it. Yeah.
Just say you're part of my trade room. She'll give you special pricing for that stuff. And then, on our future sessions, we'll talk about, it's hard to talk over this dude. It's hard to turn them off because people are on this channel.
Okay.
Just mute it for a second. Then the next thing you'll learn, which is, it's just a different way of looking at balance, are these market profile composites. That's giving you information too. So you can see here, it opened the day, try to get inside. Look like, oh, it's going to rip. Try to get inside. So it broke back out of this one, broke in that one, couldn't hold. Now it's back in here. We're starting to head towards where the guys from New York and Chicago get back from lunch. I will, when market, it might not happen today, but it might. The point is, for Thesis, again, when a market gets in the market profile composite, which are just daily value areas merged together, the tendency is to get to the other side. So this is showing its hand right now that it is not able to stay out of this one. So now that we're getting into later, so again, this can help you stay in trades, right? If once you understand how to recognize this stuff. So now what do you got here? You got accepted in this market profile composite. You know that it is about to break down out of this balance area from today, right? That is all information. So now we break down out of here. You get a short setup. You can trade double size shorts because of the information you're accruing. Again, this is more advanced stuff. You don't need to have this to make money with what we're doing in here, but you can imagine, and here we go. That was a tick extreme too. So this thing just ticked down. That was in the NASDAQ. So it had 1,000 tick. The point is, this is all looking like these markets are going to get crushed this afternoon. Do I know that? No, I don't know. Nobody knows it. But I do know if I get a bearish event, I'm going to trade double size because it has a very, very good chance to get absolutely crushed today. Would not surprise me one bit to see it make it to this put support, right? And this is also, again, tying everything in, spot gamma. I don't know if you have that. You can get 2 weeks free of that. This could not get above these important areas. And here we go. So now we've got like 3 or 4 things that tell me this market's going to get absolutely killed. Does that mean I'm just jumping in a short here? No. But if I get an event and it's a bearish event, I'm going to fire on it. See what I'm saying?
Yes, I do.
But after everything I just said, right now, if I got a bullish event and it was in an important, like Izzy's up, I would still take the long because I'm a day trader. Right? This is what people aren't understanding. Like when I'm talking about this stuff, when I'm guessing, and that's all it is, what may happen, it's just a guess. But now when I get the real-time volume showing me that's probably right, that's when you go for the throw.
Mm-hmm.
And I don't mean bet your entire account. I'm talking, trade maybe double size.
Yeah, I understand. Instead of 3 micros, 6 micros, for example.
Right. Be willing to risk. If your average risk is $500, say, okay, I'm willing to risk $1,000 on this trade. This looks too good to pass up, right? And that's like I tell the room all the time when I was training with SMB to trade stocks, they ground their traders if they don't trade their A+ setups double size, at least double size. So meaning is when everything lines up, you got to go for it, right? Because there's so many times that trading doesn't make sense, right? It's just like giving you a headache back and forth. When you see stuff lining up like it's lining up right now, these are the days that make your month, make your year. Most very successful traders, profitable traders, they only have between 5 and 10 days in the entire year that make up most of their P&L. So there's days like today's where, because most days you're just back and forth with your P&L. You make a little, lose a little, make a little, lose a little. And you get a day like today, you start getting volume events that all matches up with what you're seeing. You go for it, and this could be a day that makes your month or your year. And that's the whole idea behind the thesis stuff.
Okay.
Man. It seems like a lot, but trust me, once you start watching it, once you start to identify the balance areas and come up with a story or a thesis on the market profile, and then the other thing you want to watch, do you have spot gamma?
No, not yet.
Yeah, you're going to want this too, because this is really important information. I never really understood how important the options dealers are in here, and they never were as strong as they are now, all because of the zero date expiration games that they're playing, right?
Mm-hmm.
So that's really important to know. Like, this thing drops, for instance, so we just got the thesis. Now all of a sudden you see this thing start to drop a billion or more. These markets are going to get killed. Why? Because not only do you have those traders that are trapped in that balance area that we talked about, right? Not only do you have the market profile traders that see when it gets back in that composite, then you have the options dealers that have to sell futures because they're getting loaded up. So they're long. They got to turn around and sell futures. Now you have that wind at your tail. So this is very important to understand. And there's guys in the room that are trading off the trace here. Again, I don't even know this stuff yet. Guys are making 6-7 times their money on this stuff.
Yeah, I've seen a couple of the posts, but
They're killing it, right? And the guys are trading for these big nodes, so you can use this stuff for targets too, right? So it's like these markets will come. The market will come to these heavily concentrated volume areas too. So everything right now is looking like these market. And here you go, right here. This is what this is showing you on the left there. So these options, these are options positions. That's all right here. So it wouldn't surprise me one bit. Actually, I'm expecting that. Does that mean it's going to happen? Don't know. But again, if I start getting short setups, I'm going to fire, and I definitely am watching this area for it to get out or for targets. See what I'm saying?
yeah.
So everything right now is lining up like these markets are going to get absolutely destroyed. So then you just sit back and you wait for your volume event and your different strategies that you're watching, and then you go for the throat.
Got it. Okay. Okay. All right.
Well, again, I just threw a lot at you. That's why it's recorded. I'm really glad I remembered to record it, or that would have sucked. So I'll send you that recording once it uploads, and you just go back and keep watching it. Keep watching the webinars. It will slow down, and again, you have this. So I tell the trading room every day, you guys have the edge. There's no better edge that I've ever seen in my life. You have it. You have the rules around trading. You have everything. Now all you have to do is monitor yourself and make sure you don't turn into an idiot while you're trading. Right. So for instance, a perfect example is like I haven't had a mentoring session with this guy in the room, this Mark R. Right. Out of nowhere today, he puts in, what do you say?
Yeah, I haven't been able to get on this morning.
Strategy question. You don't talk about pyramiding positions without new events. So first of all, that's like completely contrary to what I talk about, right? Like, I don't trade without events. Then he goes, for example, I've added to positions when I hit the next entry level on your zones. Your thoughts? Just added another position to slug short on ES. And I go, what is the next level entry? The reversion long entry. So he's adding this. This is the stuff that drives me crazy. So he got short. I just showed you the slug and everything I took in ES, right? So he took this trade. So what he did, he added at the 3 ATR short. He added to the short. It's like, dude, we have a trade that trades back. Why are you adding to your? So what I just got done saying is, I'm giving you the information is to make sure you don't turn into an a-hole while you're trading. Like, what is he doing adding to this position? It doesn't mean it can't do it, but we have a trade for the tendency for it to bounce off these. Why is he adding here without you know what I mean? This is the stuff that drives me crazy. And I've gone back and forth with this dude many times. So this is why, most traders fail. They can't, I can literally come sit next to him in his house and he'll still find a way to screw up the trade. Like, why? So if he added here, he just had to sit there. It's back here now, but he just had to withstand a 25-point move against him. It's like, what are you doing? Like, so the whole point of that is, I'm not meaning to single them out, even though I'm going to single them out in the PM webinar with a nice verbal lashing. The point is, I can give you everything. I can show 3 traders the same exact thing, say this is where you enter, this is where you exit, is what you get with the zone drawing tool, right? And understanding this, and they'll still screw it up somehow. So it's like there's only so much I can do for these people, right? So my point is, learn the lessons, and then learn how to trade the stuff, and then you just got to monitor yourself.
I go through it. I watch the webinars, and then I do the replays also, and then I try to do the trades that I see on the replays, and and then I back it up, and I not back that up, but I back up the webinar, see where I went wrong, stuff like that. I study a lot. You know, that's how I approach it. That's how I approach my learning is I dig and I dig and I study and I back up and I ask questions and things like that.
Yeah,
And
you
then,
have to.
yeah,
Again, you hear me say it all the time. You're competing against the brightest minds on the planet. If you really think you're going to sit down and just start throwing orders in and you're going to be successful over a longer period of time, it's never, ever, ever, ever going to happen. All right.
no, I reloaded 3 times before I came across your course, you know, so
Well, trust me, that's low end. That's low end for most traders. Most traders blow up 5 to 10 accounts before they even come to their senses. And again, this is the stuff, I keep showing this stuff too. Like if you can understand, this is one of the best things that I've seen in here. I posted in the trade room. You go to my Twitter channel too. Like this is it, right? If you read this and internalize it,
yep.
Most traders never succeed because they trade without a quantified system with an edge. That's what I'm giving you. That's what it's the best edge ever. They trade too big, right? You got to, and that's part of the zone drawing tool. Just plug in your risk. It'll tell you how many you trade. This is what I mean about not being an idiot. So they trade based on their emotions, ego, and predictions, not price action. So again, I'm giving my prediction that we're going to go to lows today. I don't know. That's why I need to see my events and my rules around my events. But if you can internalize that, you're there. But this is why traders fail.
There's a couple things that I'm still working on. You know, the whole concept of the trailing stops. You know, for example, let me just move it up where I can break even, kind of thing, and let it ride. You know, these are things that I'm forcing myself now to get away from.
Yeah, that's you hear me all the time. That is the dumbest. What do you think these algo? What do you think this stuff is?
Yeah.
Right here. Like, what do you think that is? These are algos knowing when nothing's going on. They could see it just like we can. New York goes to lunch. This is when they start taking everyone's money. So you got short, say you got short with me, and you're like, oh man, I got like 10 points in this. I'm gonna move my stop. Now I'm gonna move my stop to there down to there just so I can lock in my profit. Oh, great.
Mm-hmm.
So you stopped out. These algos stopped you out on this whipsaw, and then and then at the end of the day, you're like, oh my god, I cost myself 70 points because I moved my stop. So
Yeah.
the rule of thumb is just trail your stop to a new event. If you don't get a new event, it doesn't mean it can't come back up here and stop you out. Then you just say, big deal, on to the next trade. It's when
Yeah.
trade.
That's the second thing I'm working on, from that emotional side of things of treating it like not a big deal, going to the next, you know, that kind of a thing. So those two things are kind of going hand in hand with me right now.
Yeah, absolutely. And those are the biggest mistakes traders make. So if you can get through those, you can master those, and you're there. If you have an edge and you master your emotions and not breaking your rules, you're there. You'll be a profitable trader.
All right. Looks like we've reached the hour. So.
Okay. All right. Well, you got 2 more. Let me know when you want to meet again.
Yeah, I think what I'd like to do you have any kind of openings on, you know, on a Friday, for example?
Fridays, sometimes. I mean, that's why I don't play, or I play golf in the afternoon. So I usually leave mid morning. But yeah, I mean, maybe like early mid morning, right after the webinar type of thing.
Yeah, we could. On Fridays, it's more flexible as far as my schedule. I'm working remotely, and I can kind of move things around, and that will give me the opportunity to share the screen as well.
Yeah, because you're going to want to do that because you're going to want to, and I'd be doing screenshots too. So even if we're not doing it live, you can be like, here, these are the trades I took. What did I do here, type of thing.
Yep. Yep. And we start posting more towards the screenshots on disk as well. I did one last week of a successful one that
Screenshots
I
on
had.
what?
Of the trades, you know, on Discord, the
Yeah,
room.
yeah.
Sorry.
Yeah, absolutely. You should post everything you see because even if you're wrong, someone will correct you. You know, if I'm watching it, I'll correct you. There's plenty of traders in there that know what they're doing, and everyone's, no one's like gonna yell at you, or I'm not gonna yell at you either. But that's how you
Unless,
get better. Even if it's wrong, you like learn from it. You're like, okay, this
yeah.
is what I did wrong. I keep telling you that the traders that don't make it are the ones that are in and out of here that never participate.
Unless I add to a short on a 2 ATR zone.
Yeah, no, that was 3 ATR. I just don't get it. Like, I don't know what else to do. Like,
I don't have
I can
3
go sit
ATR on
next to
mine.
the guy. I can go and sit next to the guy and punch him, and he probably still would do it.
Yeah.
So I gave up a long time ago. Like, it used to really bother me. Like, I took it personally, but it's just like some people just don't get it. I
Yeah.
can't explain it. Some people just don't get it.
Yeah. So, and just to let you know, like I said before, I'm not looking at this as, like a get rich thing. I am looking at this, I'm looking to retire in a couple of years, and I want to have a skill set that I can use to help out once I retire.
Yeah, absolutely.
That
Again, if
is
you get
that
all this stuff down now, then you'll be ready to go.
that
You'll
is
be
my entire purpose for this, is to have. I see the promise. There's a promise to this that I can see, and it's like I'm in it, and that's my entire purpose, is to have something for when I retire.
yeah, absolutely.
So,
Absolutely. You're on the right track.
all right, Scott, appreciate the time.
Sure. I'll talk to you soon.
Talk to you. Over here.